there's a few guys.
Yeah, I think they're all
on.
upstairs.
survival of our existence.
Today's an amazing day for Beach Energy. We're very proud to announce a major sponsorship with RFDS, supporting this new aircraft. It's an amazing aircraft for us. We operate in remote locations. We rely on the help of RFDS if any incidents occur out there, and we have for a long time. Today we're now a major sponsor, which is a great step in our future with them.
Every day on average we'll see 918 patients. That's somebody every 2 minutes. In South Australia and Northern Territory on average we airlift 27 people every day.
We're in the middle of Australia, in the middle of our great state in SA. Conditions are harsh. It can be over 45 degrees on many days out there. It's great to know that RFDS are there to help us.
Today is an important day for us as we gather to mark the official dedication of VHJDN, or Jimmy Darcy. It is a great symbol of years of hard work. It is a symbol of great corporate partnership. It is a symbol of generous support we receive from the community, and it is also a symbol of why we exist. That is, to provide the finest care, to support healthy, happier Australians, no matter where you live, work or play.
Our staff have always shown incredible support for the RFDS. They know how important it is to them and their families. So they've done their own fundraisers, both out in the Cooper Basin and also within Adelaide. So again, we're extremely proud that our staff have supported the RFDS. It's a new step change for us and we're really proud of it.
Good morning, ladies and gentlemen. What a great job the RFDS does. Thanks for taking the time to be with us this morning, and welcome to the 2019 Beach Energy Annual General Meeting. There's clearly a quorum present. As you know, safety is one of our core values at Beach, and I'll start with my usual safety message. In the extremely unlikely event there's a problem today in the auditorium, you'll hear an alarm. If you can please just calmly exit through the signed doors, and Convention Centre staff will be on the other side waiting for you to take you to a muster point, and we'll assess the situation. Like safety, respect is one of our core values as well at Beach, and we respect the traditional custodians of Australia and New Zealand. We acknowledge that we are meeting today on the traditional country of the Kaurna people of the Adelaide Plain, and we pay our respect to their elders past, present and emerging. We also recognise and respect their cultural heritage, beliefs and spiritual relationship with the land, and acknowledge that they are of continuing importance to the Kaurna people today. A few housekeeping items, if you can just turn those mobile phones off please. There's no unauthorised recording or taping today. Proceedings are being webcast. You'll be able to see it on the website later if you want to have a look again. Our compliance statements are up there behind me for you to have a look at. You can review them later if you like. A few introductions. It's not just me on the stage. If you don't know me, my name's Glenn Davis. I'm the chairman at Beach. And then moving down the right along the line, we have Matt Kay, our MD and CEO, Colin Beckett, Deputy Chair, Sally Ann Lehman, Phil Bainbridge, Peter Moore, Joycelyn Morton, Ryan Stokes and Richard Richards. Ladies and gentlemen, financial year 2019 was a very strong one for your company. Record safety performance, record process safety performance, record production, a statutory NPAT of $577 million, and the repayment of $950 million in debt as a consequence of the Lattice acquisition to now be debt-free. And in FY20, we continue our growth program with approximately $250 million being invested into the Western Flank, $220 million being invested into the Cooper Basin joint venture with Santos, $220 million being invested into the Victorian Otway Basin, and another $100 million across the balance of our portfolio. It's an exciting time for Beach Energy and its shareholders. In a moment, Matt will have the opportunity to give you plenty of detail about that. But we think it's also an exciting time for others as Beach grows. In growing, we also grow our contribution to our broader stakeholders, and it's here that I want to reflect briefly this morning. The most objective measure of our contribution is the payment of royalties and taxes. It's often overlooked, but in FY19, Beach paid $496 million in royalties and taxes. Now, that money helps fund hospitals, schools and roads, and it pays the wages of doctors, nurses and teachers. It's an important contribution. In addition to this, the reinvigoration of the local gas industry in the southeast of South Australia with drilling at Hazel Grove 4 and Dombey 1 and the construction of our new gas facility at Katnook has seen Beach spend $9 million across 60 local service providers in the southeast. Wherever we can, we will use local goods and service providers to support and be an active member of the communities in which we operate. However, our commitment to our communities doesn't start and end at royalties and taxes and local service providers. It's much more than that. This year, we've refreshed our community investment program, which is now underpinned by the United Nations Sustainable Development Goals. In FY19, we increased our community investment by 84% to $1 million through the support of 38 community organisations both here in Australia and New Zealand. You saw at the start of the meeting, one of our bigger and more high-profile contributions was becoming a major sponsor of the RFDS in South Australia and the Northern Territory. The RFDS provides crucial emergency services to outback communities at their times of greatest need. And we're a very proud partner with the RFDS, supporting a state-of-the-art aircraft, which is an intensive care unit in the sky, not only helping our staff and contractors, but also the local communities where we operate. And in FY20, we've increased our community support further with new sponsorship deals for the South Australian Health and Medical Research Institute, better known as SAMRI to most of us, and Zoos SA announced in the past few days. I think the Zoos sponsorship might have got some media coverage earlier this morning. But we do take great pride in the role we play in the communities where we work. Our growth also allows us to deliver more gas into the Australian domestic market. In FY19, we supplied approximately 15% of Australian East Coast gas demand. As demand for energy is set to keep growing at the same time as society seeks to reduce emissions, our supply of gas instead of higher emissions fuels as we continue to transition to more renewables is a critical piece in the lower emissions puzzle. As our climate change policy and sustainability reports state, we are committed to playing our role in a lower emissions future. In addition to that critical supply of gas, we have also taken other steps. In FY19, we adopted the Task Force on Climate-Related Financial Disclosures recommendations, and you will have seen that as a consequence of that, we've updated our governance documents to strengthen governance in relation to climate change all the way to board level. We've developed and published our climate change policy, which you'll be able to see on our website, and we modelled the impact of 4 climate scenarios from the International Energy Agency. A key conclusion from that scenario modelling was that under all scenarios, our current portfolio remains financially very robust and resilient. In FY19, we also embarked on a number of emission reductions projects, including the installation of solar panels in the Cooper Basin and at Port Bonython with Santos under the Cooper Basin joint venture. And in FY20, we'll be stepping up our efforts further by conducting an emissions benchmarking study across all of our assets. That's an important step towards setting emission reduction targets across our portfolio in the years to come. Continuing to execute against our goal of delivering strong shareholder returns obviously requires the very best people, and I want to acknowledge a few important changes on the people front during the year. Let me welcome Sally Ann Lehman to the Board of Directors. Sally Ann was appointed in February this year and is up for election by you as our shareholders today. Sally Ann comes with over 25 years' experience in the resources sector and financial markets, including 14 years with Macquarie Group, where she was Joint Head of Metals, Mining and Agriculture in Perth. Sally Ann has immediately been a very valuable contributor in our boardroom, so welcome, Sally Ann. Also in February, your Chief Executive, Matt Kay, was appointed to the Board of Directors as Managing Director. That appointment recognises the strength and value that Matt brings to the organisation, and we look forward to Matt's continued contribution and leadership over the coming years. I'd also like this morning to acknowledge all of the other crucial contributors to Beach's continued success, and that's our employees and you, our shareholders. To continue to achieve the results that we're reporting and meet our growth expectations does require a lot of hard work, dedication and teamwork, and I thank and congratulate Matt and all of our 500 employees for being a part of that. They should be very proud of their recent achievements. And finally, a thank you to you, our shareholders, for your continued engagement and support of the company. Your company is in robust financial health. We've got an excellent portfolio of assets that we believe the team will continue to explore and develop to drive further shareholder growth over the coming years. You've got much to look forward to with the FY20 program that I outlined earlier, and with 90% of our FY20 growth projects delivering returns in excess of 50%. I'll now hand over to Matt. He'll take you through in detail some of that strong performance in FY19 and our plans in this current financial year. Thank you.
Thank you, Glenn. And hello and welcome to everyone joining us today. For those who don't know, I'm Matt Kay, the Managing Director and Chief Executive Officer of Beach Energy. I'm particularly proud to stand before you today and run through some of our team's achievements in FY19, and also our priorities for 2020 and beyond. We came together at last year's AGM just 6 months after the completion of the Lattice acquisition. Since that time, we have fully integrated the Lattice staff and the assets into the broader Beach portfolio. We've also accelerated our investment in growth in that portfolio. As you know, our expanded portfolio now has 5 production hubs servicing 3 distinct gas markets. While we finished the year as the largest oil producer in Australia, I'm particularly proud that we now supply gas to approximately 15% of the Australian East Coast gas market and the New Zealand gas market. Our gas business provides resilience for the company. The revenues that it generates covers the totality of our operating costs. That means with our strong balance sheet, it provides a natural hedge against any oil price outcomes. FY19 was an outstanding year for our teams on almost any measure. We embarked on our biggest capital program ever. We invested $447 million. We drilled around 134 wells with a success rate of 84%. We set ourselves some ambitious goals, and I'm pleased to report not only did we meet those goals, but in many cases, we knocked them out of the park. Our aim is to be known as a company that delivers on its promises. I'm pleased to say that FY19, there's ample evidence that we did just that. The list on the screen outlines just some of the metrics where we either met or exceeded our guidance or market expectations. I won't read them all out, but I would highlight that Beach produced 29.4 million barrels of oil equivalent. We more than doubled our reserves replacement target, and we delivered a return on capital employed, which is impressive, at 27%. Importantly, we were able to grow and achieve those objectives in FY19 without increasing our operating costs. In fact, we've made good progress on reducing our direct controllable operating costs, and we believe there's more opportunities for improvement ahead. As you know, health, safety, and environmental management are a top priority at Beach Energy. We want to ensure that our workers and our contractors stay safe, the environment and communities are respected, and we retain our licence to operate. To that again, we had an excellent year in FY19. We enjoyed our safest year on record, our best environmental performance on record, our best process safety year on record. That's an exceptional performance by our teams in a year when we were undertaking integration of a major acquisition, and we became an operator of onshore, offshore, and large gas processing assets. Even with that pleasing result, 0 recordable injuries is always our goal. With this in mind, our dedicated HSE and operational teams are working towards further improvements in the years ahead. At our Investor Day in September 2018, we took the unusual step for an Australian E&P company to release a 5-year outlook for production, free cash flow, and investment. We believe the 5-year outlook is readily achievable from our existing portfolio without requiring any material exploration success, blue sky, or acquisitions. You would have seen that we've recently updated that 5-year outlook at our full year results day in August. The upgraded outlook in production and free cash flow was mainly generated from the very positive drilling results of the Western Flank, reserves upgrades in the Otway Basin, and the positive work on the undeveloped Trefoil field in the Bass Basin. Our revised outlook has beach production reaching 34 to 40 million barrels of oil equivalent in FY24. We also generate an outlook of $2.7 billion of free cash flow over that 5 years, while we also invest over $4 billion in our business. I'll say it again, those targets are achievable by investing in our existing portfolio and don't rely on any material exploration success. And our 5-year outlook starts this year in FY20. I won't dwell too much on our FY20 guidance, which is presented behind me and was released again at our FY19 outcomes in August. If you thought FY19 was a big year for Beach, we're stepping it up to another level. We almost double our capital expenditure in FY20, and much of this is focused on transferring 2P reserves into production and creating a sustainable gas business. Less than half of our FY20 capex is linked to FY20 production, which is between 27 to 29 million barrels of oil equivalent, which of course drives EBITDA of between 1.25 and $1.4 billion. I'm pleased to report that as of today, we're on track for our guidance for FY20. It's worth highlighting where we will be investing those dollars in FY20, and these charts show the capital split in many ways. Over 85% of our FY20 capex will be directed towards growth investments, with 90% of that targeting returns of more than 50%. Almost 2/3 of the capex in FY20 will be directed towards supplying the East Coast gas market, and 30% towards our oil assets. Almost 60% of the investment will be in the Cooper Basin and 27% in the Victorian Otway. In short, it's a big year for Beach. I'd like to highlight 4 asset areas where we see considerable growth in our portfolio. And while we love all of our assets equally, these are the ones that we believe will be the centre of market attention over the coming 18 months. And they are the Western Flank, the Victorian gas assets, the Perth Basin, and frontier exploration. Let's start with the Western Flank, an asset that's been core to Beach for more than 10 years. Yet, it's fair to say our understanding of those assets and its true potential has emerged in the past 18 months. To put that in context, 3 years ago I stood before you and said that our Western Flank oil 2P reserves were 13.8 million barrels. Through a change in appraisal and development strategy, across those 3 years, we've already produced 15 million barrels. Indeed, at the end of FY19, our Western Flank 2P oil reserves have increased to 42 million barrels. Put simply, the success of the appraisal campaign has more than tripled the size of Western Flank 2P reserves. And the good news is, we believe there's more to come. That's why we're increasing our Western Flank investment in FY20. We're expected to double the number of wells that we drill there this year. And if you look forward over the next 5 years, we believe we'll drill around 300 wells in the Western Flank to understand, delineate, and develop its full potential. Let me give you just one simple example. In the past few weeks, we drilled the Bower 39 horizontal development well. It had a lateral length of 1,600 metres, the longest lateral that we've drilled to date. The net pay from this well is estimated at over 1,300 metres, and it's confirmed a further extension of Bower to the southeast of the field. The well was drilled on time under budget. A great performance by our drilling team. In FY19, Beach also supplied more than 85 petajoules of gas into the East Coast gas market, which is enough to meet approximately 15% of East Coast domestic supply. But the market demand is still short of gas supply and remains reliant on gas being diverted from LNG projects in Queensland to ensure there's no shortfall. At Beach, we're making a determined effort to bring more gas supplies to the East Coast. When discussing CapEx, I mentioned that almost 2/3 of our FY20 capital is directed at more supplies of gas to the East Coast market. And as shareholders, you can be sure that governments and gas customers appreciate that Beach Energy represents part of the solution. Here in South Australia, we're constructing a gas plant near Katnook in the southeast, and we're looking to secure more supplies to keep that fill and possibly expand the plant. We're encouraged by the recent drilling results at Hazel Grove and the successful Dombey exploration well. More work needs to be done here, but we're off to a great start. In Victoria, we're about to commence our $1 billion 11-well drilling program in the Otway Basin with the drilling of Blackwatch 1. Blackwatch is the first of 2 extended reach wells and the first new well to be drilled to supply the Otway gas plant in 5 years. Gas from Blackwatch is expected to commence production in the second half of FY20. In the March quarter of 2020, we expect to welcome the Ocean Onyx offshore rig to the Otway Basin as we commence our offshore drilling campaign, starting with the Artisan exploration well. Our aim of the program is not only to refill the Otway gas plant with our 8 low-risk development wells, but to get to the point where we can ask our operations team to debottleneck the 205 terajoule a day facility to accommodate gas from our exploration campaign. Across in the Bass Basin, our work on the undeveloped Trefoil field concluded the development is not just viable, we expect it to be commercial, allowing us to extend the life of our Lang Lang gas plant. And you'll hear more on that as we progress. Moving across to the Perth Basin, it's interesting to see what a couple of months makes in terms of difference to market perception of this basin. Internally, we've been a strong supporter of the basin over a number of years. While our primary focus has been on commercialising the large Waitsia gas discovery with our partner and operator Mitsui, we've also been keen to explore for additional volumes on the same Kingia sandstone that was found at Waitsia. In the past 2 months, both Beach and another operator have announced new Kingia gas discoveries in high permeability reservoirs. Our recent Bahara Springs Deep discovery is a significant step in our Perth Basin gas strategy. The well was drilled in 5 days under budget, and importantly, the initial flow tests have shown excellent pressure responses, similar to those at Waitsia 3 and 4. Production tests will be undertaken in coming weeks. The really positive news here is we believe there's a lot more potential in the basin. We're not standing still. We're moving ahead with plans to evaluate and unlock the potential of the basin over the coming years. And we're excited by the basin, what it can deliver for Beach, for our shareholders, and the broader gas market. You're going to hear a lot more from us about the Perth Basin. The final area I wanted to highlight was our upcoming frontier exploration opportunities. Our exploration team does a great job of carefully assessing new opportunities for investment, and our hurdle for frontier areas is very high. We're not a company that participates in 1 in 8 or 1 in 10 chances of success, no matter how material they may be. We like to focus on the 1 in 3 or 1 in 4 chance of success opportunities at these large frontier plays. We currently have an interest in 2 material frontier exploration opportunities that fit the criteria. Our investment in these wells in the Carnarvon Basin and offshore New Zealand is modest. We're not betting the company on these. However, if they're successful in any one of these wells, there's potential to add material resources to the company and provide another growth platform for the medium to longer term. In short, they have company changer potential. I think the drilling schedule slide behind me here highlights the busy and incredibly exciting year that we have ahead of us at Beach. Beach is now employing 10 rigs in FY20, up from only 4 in FY19. We have 2 to 3 rigs operating in the Western Flank, in addition to the 4 rigs that are operating in the Cooper Basin joint venture with Santos. We recently completed drilling of Dombey near Penola, and that rig is moving its way towards Blackwatch well site in Victoria. In the next few months, as I said, we expect the Ocean Onyx offshore rig to arrive in Victoria and commence our offshore exploration and development campaign. In the Perth Basin, as mentioned, we've completed the Bahara Springs deep well, and we expect to drill more wells to further explore and appraise the Perth Basin. So have no doubt, Beach is a growth company. With a portfolio of growth opportunities like ours, where more than 90% of our investment in FY20 is targeting internal rates of return of more than 50%, we believe our capital allocation is appropriate to increase shareholder value. We know some of you would like to see more in terms of shareholder rewards through higher dividends. We're conscious of the desire. It's an issue that the board discusses on a regular basis. As our 5-year free cash flow outlook shows, most of our operating cash flows over the next 2 years is being reinvested in highly value accretive opportunities. With a large investment program underway, market volatility at elevated levels, and oil prices hovering around the $60 US a barrel mark, we believe it's in shareholders' best interest to maintain a very strong balance sheet. As we move through the next 2 years of our investment program and we generate higher levels of operating cash flow, the company should be in a better position to consider increased dividends to shareholders. In the interim, our focus is on generating shareholder value through the share price. So let's move to a final slide, slide 21, and our key takeaways. 1, we've had an outstanding FY19, both financially and operationally, further enhancing our balance sheet. 2, we have a portfolio that represents exceptional growth opportunities. 3, we have the plans and the people in place to exploit that existing asset base over the coming years. 4, as we mentioned, keep an eye on the key assets: Western Flank, Victorian Otway, Perth Basin, and our frontier exploration portfolio. 5, our investment in FY20 is just the beginning. In the past year, we've identified another $1.5 or $1.5 billion worth of new growth projects to target in the next 5 years. It's a mix of short cycle oil wells and longer term gas opportunities. 6, the end result of all this is our production and free cash flow targets over the next 5 years, while also targeting rates of return on capital employed of 17 to 20%. So in closing, I'd highlight that the Beach portfolio represents an outstanding platform to increase shareholder value. With high returns on offer, now's the time for us to accelerate our investments. I'd like to take the opportunity to thank all of our staff and our contractors for what's been an outstanding year in FY19. And we seek to carry those high standards of performance and values forward in coming years. I'll now hand back to Glenn to commence the formal part of proceedings. Thank you.
Thanks, Matt. Just before we get into the formalities, now's an opportunity if there are any questions on the presentation this morning or our operations generally. There's a couple of microphones I think I can see in the walkway back there. If you'd make your way to one of those microphones and ask your question, I'll do my best to answer them. Good morning, James.
Morning, Glenn, Mr. Chairman. My name's James Hahn, and I'm here with my colleague John Worthley. We represent the Australian Shareholders Association. We met with Glenn earlier in the year, and about a month ago, and we discussed many things, and we thank you for that, for answering all our questions with our satisfaction. The time spent in dialogue with you in pre-AGM saves me answering a number of questions at this meeting. We're speaking on behalf of 2 million share proxies donated by about 80 shareholders. And in the past I've had questions and things to say about Beach that were not positive. Last year it was all positive. And I'd have to say I congratulate you for a very solid performance. My intention is to vote our open proxies in favour of all proposals at the meeting. And as a reminder to ASA members, if you wish to access the details of our decisions on the resolutions, they're posted on the members only section of our website. And again, I would like to say that Beach has had probably a rocky decade, but from our perspective as retail shareholders, you're going very, very well. I congratulate you again.
Thanks, James. We appreciate some positive feedback. I can assure you that's not what we always get, but we do appreciate. Don't congratulate us, congratulate our 500 employees. They're doing a fantastic effort. But thank you, James. Yes, madam.
Morning, Glenn.
Is that you, Anne? I just can't
Yes,
see. Good
yes.
morning. How are you?
Good, thank you. Last year at the Roundtable for Oil and Gas, I raised the fact that Beach Energy had trucked contaminated hard waste and drill cuttings, of which I have the mud report, 300 kilometres to McLaren Vale, and this waste was buried in an unlined quarry. 4.5 million cubic metres of contaminated and unprocessed gas was flared from the Hazel Grove 3 Sidetrack 1 well across the vineyards south of Penola. When I showed the EPA a picture, they admitted that hydrocarbons were being released into the air. Flaring and venting will also occur at the new gas processing plant. Mercury is often found with methane and has to be separated out at the gas processing plant. It has previously been found in sludge at the Katnook gas plant, as well as groundwater 06 and groundwater 09 nearby. We are seeing unprecedented bushfires and drought across Australia, impacting our agricultural food bowls. Goyder's rainfall line is over the Dukes Highway and moving 1 kilometre south per year. Why is Beach Energy still prepared to risk contamination of air, soil and water in the southeast, prime agricultural area, which may eventually end up in the human food chain, given that the southeast is one of the very few reliable food-producing areas in Australia enduring the shocking drought, when the area should be left uncompromised for food production?
Thanks, Anne. There's a number of issues in there, I think. Let me deal with the cuttings first. So some cuttings were transported from Hazel Grove 3 to an EPA licensed facility near McLaren Vale in South Australia. Those cuttings will have been treated at that facility in accordance with the regulations before they were deposited into a high-grade, low-level cell. They can't be deposited in those cells without an EPA audit being conducted. So we're very confident that those cuttings were disposed of in accordance with the regulatory regime. In terms of flaring, flaring is a much better practice than venting, and we intend to flare more than we vent. Obviously, we don't want to flare or vent any gas. The more gas that we can supply to the market, the better off we are and our shareholders are. But there are some instances where we do need to flare or vent, but we try to keep them to a minimum. But where we do flare, the sort of issues that you're concerned about, the idea of the flare is to combust those elements that you're concerned about. And again, we're very confident that we comply with all of the regulatory regimes in terms of both flaring and venting. The broader issue that you raise in terms of why risk contamination in the southeast, I think there's a number of answers to that, Anne, but the principal answer is that whether you like it or not, the world needs hydrocarbons. Humankind has developed a society where hydrocarbons are critical to our current existence and our current way of life. It's our job as a board and shareholders to deliver those hydrocarbons, and we intend to continue to do that. But we do intend to continue to do that in an environmentally and socially responsible way. And I can tell you that that is what we do. You know, this company takes very seriously its environmental obligations. It's a topic of conversation at the board level frequently. It's monitored through risk committees at management level, at board level, and then at the board itself. And we continue to do that and intend to continue to do that to deliver hydrocarbons to society that actually keeps crying out for them. We don't think it impedes in any way, shape or form agricultural produce in the southeast of South Australia at all.
I think, Glenn, that when you look at the National Vendors Declaration, you look at the flaring, you look at the colours that were coming from that flaring, I have to disagree.
Happy to agree to disagree, Anne.
Hello. Malcolm Will, the thing I haven't heard mentioned is the price of oil and gas. And surely the profit of the organisation depends very much on those factors.
Certainly does. You know, we're a commodity company, and so the price of oil and gas is critical to our financial success. I think, you know, the ACCC has published some data recently in relation to gas prices in the east coast of Australia, where we supply the majority of our gas. They've said for FY20 supply it's between high 8s and high 10s per gigajoule, and we think that price range is about right. We think the ACCC's got it about right. In terms of oil, that's a very difficult commodity to predict in terms of its fluctuations in price. At the moment we're sitting around, I think this morning, $63 US for Brent. If you look at FY19, I think the realised US dollar oil price for us was between $50 and $86 a barrel in the span of that 12-month period. So it's a very volatile commodity, it's very difficult to predict. But the one thing I can say about oil price and its effect on Beach these days is that, you know, we have a natural hedge now through a much bigger gas portfolio. And so the fluctuations in oil price, whilst they will have an effect on us, we think the company is very resilient to even lower oil prices than we see today.
Good morning, Glenn Davis. My name is George Torelli. I'm a trustee of our super fund, and we represent 85,000 shares in Beach, and we're a long-term holder. We go back to days when they were 30 cents. I congratulate the board on its good achievement, your finance performance solid, but I will be critical of your dividend policy. For a number of years now, we've been sitting on 2 cents per annum, 1 cent interim, 1 final for the last 3 years. Prior to that, I think under the former chair, the late Bob Kennedy, he recognised that the shareholders of Beach were, he referred to them as the grey nomads. I was actually insulted at the time because I was a bit younger. But they are the people who rely on a regular income, and your shareholders' return, while it looks fantastic at 27%, doesn't help us maintain our daily living. When most people in this room, I suspect, would not be in the business of buying and selling shares. So we do rely on that regular income. Now, even in your AS announcement, the final result, there was only a one-liner that talked about the dividends, 1 cent. Your whole policy is to play that down, which I think is disappointing from my perspective, and I suspect from many others' perspectives. So I do encourage the board to seriously look at your dividend policy. Your payout ratio was 2 cents. Sorry, your pay dividend was 2 cents. On an earning per share of about 25.4, by my calculation, that's a payout ratio of about 8%. That's pretty low, and I think it's not going to help those seniors in this room who may, or retired people who require a regular income. And I think you have forgotten us. You do a lot of good work in relation to supporting many communities. In today's paper, we've got the Adelaide Zoo, $1 million, the Royal Flying Doctors, and I support all of that. But I do think the board has forgotten about the shareholders who rely on a regular income. And I just wonder, there I put my foot in my mouth on this occasion, since we've now have, and I also have shares in our family in a 7 group, their policy is also to pay lower rates. They have recently, after many, many years, increased the dividend from 20 to 21 cents a share. I just wonder whether that's an influence that has been impacted on this board, because you know, if I remember the philosophy of Bob Kennedy, the late, it was to look after us. And I do think this is one area that the board, I think, if I can put it politely, would need to lift its game and listen to us, that you can pay a bit more. Surely 2 cents fully franked final dividend would not be of the order. I've got the Goldman Sachs recommendation in. I've got you paying out 2 cents for the next 4 or 5 years. Morningstar a little bit more generous, about 3.3. So please consider that we do, there are people in this room who do require and look forward to those dividends. And I think what 1 cent is about, 30 million? That's one less hole to drill. Try and balance that out, that our shareholders, those who have been with you for a long, long time, do require the regular income. Thank you.
Thanks, George. Look, I understand your concerns and those of other retail shareholders that are in the room or on the register and not here with us today. I don't want to repeat what Matt said at the conclusion of his presentation, but I can assure you and all of our other retail shareholders that the board does regularly debate the issue of dividends and whether they should be increased or not. We made a decision this year that they shouldn't be for the reasons that Matt espoused earlier. I think last year when I stood here, I said unashamedly that we were a growth company, and I say that again today. We are unashamedly a growth company. And I think we've rewarded shareholders in the sense that if you had $1,000 of Beach shares at last year's AGM, on my quick maths this morning at yesterday's closing price, you'd have $1,529 worth of Beach Energy shares. So that is a reward to shareholders. I know, George, it's not in the sense that you're talking, but we are trying to reward shareholders through that capital growth. We have got a very large capital program. We are trying to maintain a very strong balance sheet. It is a balancing act, I accept. We've heard what you've got to say, and we will continue to assess it and have regard to your comments going forward.
My name's Richard Bentley. I'm from Mile End and a registered proxy holder. I was pleased to hear in your address that you actually referred to some of the aspects of my question, and it may be that if I went to the website that I would find the specific answers, but still I'll ask my question. The sustainability report on page 24 states that investment screening and decision making takes into account the greenhouse gas emissions from a particular project and the economic impact the carbon price would have on our business. What shadow carbon prices over what time frames does Beach apply to its investment decisions, and why aren't these disclosed to shareholders in line with the recommendation of the TCFD report?
So look, we take climate change scenario modelling in relation to all of the decisions that we make as a company, whether it's to develop an asset or to invest in a new asset. We have a carbon price that we use in relation to making those decisions. But those decisions and the assessments that we make, they're commercial in confidence decisions that we make for the benefit of our shareholders. They're not things that we want to share with the rest of the world.
Now, I did hear you say that you stress test your program, so specifically the International Energy Agency Sustainability Development Scenario projects carbon prices of $100 per tonne of CO2 by 2030 and $140 by 2040. Now, Beach plans to invest in a significant amount, as you've alluded to in your address this morning, to significantly increase production out to full year 2024 at least. Have those plans been stress tested against the carbon prices set out in the sustainable development scenario?
I don't want to repeat myself, but we do use a carbon price that's internally calculated for our investment decisions. We're not going to share what that is, but on any view, we have the belief that our portfolio is very robust moving forward against any of the International Energy Agency scenarios.
That effectively means that a shareholder has to take you on trust that you are effectively assessing the risks to the shareholder.
Yes, I'm afraid shareholders do have to take me and the rest of my colleagues on the board on trust in relation to that issue and thousands of others.
Hello, my name is Stephen Fuller. I hold a proxy for Dr. Patrick Conahan. My question is, I understand that Beach is planning to set greenhouse gas emission reduction targets in FY 2021. Better late than never, I suppose. Now, through initiatives such as the Climate Action 100, investor expectations around target setting have become pretty clear. So can the board please confirm that our 2021 emissions reduction targets will cover short, medium and long-term timeframes, cover our entire value chain and be verifiably aligned with the climate goals of the Paris Agreement?
No, I can't guarantee you that. The reason that we're doing a benchmarking study is to assess emissions across all of our assets until we've done that benchmarking study, I can't speak publicly about what our targets are going to be. It would be foolish for me to do that.
Are institutional investors engaging with Beach and asking for short, medium and long-term targets to reduce emissions across the entire value chain in line with the goals of the Paris Agreement?
Our institutional shareholders engage with us very regularly and at a very deep level. There is very little questioning from our institutional shareholders about climate change.
Thank you.
I'd just like to close off one point that George raised, which was remiss of me. I'm sorry. You made a suggestion that SGH on our register has had an influence on our dividend policy, George. I can assure you that is simply not the case. Yes, sir, sorry.
Thank you. Angus Rolton from Limestone Coast Protection Alliance, proxy holder for this meeting. Bearing in mind the considerable opposition to Beach Energy's activities in the southeast and also in the Waitsia areas, will Beach Energy force itself onto a property without the consent of the owners?
I think the subtext of your question is not something I can agree with. We're not experiencing considerable opposition either in the southeast or in the Perth Basin, but it's always been Beach's policy that we will not force ourselves onto somebody's property. We need landholder consent, and we have that in all instances. Are there any other questions, ladies and gentlemen? No? If not, I think that ends the webcast this morning. Thanks to those who tuned in. We'll move on to the formalities for today. We now move to the formal part of the meeting where we address our ordinary